Welcome back, everyone. Greg Vandenberg is here with us from Bank, and he's here to talk to us today about why China is crypto's biggest player. So please welcome Greg Vandenberg.
Good morning, everybody. Great. I'm really glad you're all here. It's my first time in Dallas, first time in Texas, actually. So I'm really excited to be here. So yeah, my name is Greg Vandenberg, and for the last 6 years, I've been living in China. I'm not sure how much you guys know about China. Who's been to China? Cool. Wow. All right. Like 2% of the of the people. Great. So yeah, China is still responsible for about a third of all the crypto trading. It's more than any country in the world. China also has a lot of mining. So this picture is of a company called Bitmain, you might have heard of. So Bitmain is actually, this is just one of the warehouses they have. So they have these big parks, and they're like 10 warehouses per park. And they have like hundreds of those all over the country. So it's really big. China is also responsible for about 80% of all the hashing rate of most cryptocurrencies. So it's really a factor that you cannot not think about. It's too important in sort of what we do. And there's a picture of Shanghai. So it's quite funny, actually. Normally when I give a talk in China, and I ask people, who's been to the United States, sort of 3/4 of the people takes up their hand. And when I say who studied in the United States, it's kind of like half the people. So a lot of the key people in crypto in China actually know exactly really well what's going on in the United States and other countries. But I noticed that from the US to China, it's totally not the case. And so we can leave quite a lot of time for Q&A afterwards to talk a little bit about China and what the effect would be on crypto, et cetera. So China, the main thesis of the talk is that China has been the main driver of crypto and also will be in the future. And I kind of want to go a little bit about a thought experiment about what exactly will be the key drivers of crypto coming out of China going forward. And then also how does our company, so we're based in Beijing, Shanghai, we have about 45 people. How do we work as a catalyst for that? So where are we now and where are we going? So I was in Davos about 2 weeks ago, and at the World Economic Forum has done a lot of research on blockchain. There was a lot of blockchain talk going on, and they made the bold claim that by 2027, so less than 10 years' time, 10% of the world GDP will be in digital assets. Now, the big question is, how do we go from where we are now? So now it's by far less than 1%. So 10% is around 10 trillion. Total market cap of cryptocurrencies is around 500, 600 million, depending on the day. How do we go from where we are now to there? And so the big answer for that is something I would like you to think about. Historically, which group of people was the first mover en masse into any new asset class, whether it's venture capital, private equity, whether it's junk bonds, emerging market as an asset class? Does anyone have any idea? What type of investor? Anyone? Institution? Yeah, actually, no, it's not institution, but it's a good start. Institution normally is second, right? Yeah, so venture capital are the institutional investors that sort of are normally in early stage ventures. But who are the first backers of venture capital? I mean, when venture capital as an asset class came out, who were the first backers of venture capital funds? Agents, yeah, angel investors. But who are they mostly? They're not institutions, but they are? Individuals, yeah. What kind of individuals? Yeah, entrepreneurs, right? Family offices, wealthy individuals. So if you look at most people with most risk capital, they're the family offices, right? They don't have any LPs, unlike individuals. They have a lot of risk capital. They just invest for themselves. And so if you look at it historically, I was in Singapore the other day with Mark Mobius. He's kind of the key guy who got emerging markets to come. The first investors were really family offices or wealthy people that says, yeah, this makes sense, I move into it. For institutions, until let's say HSBC is going to be fully blockchain based, it's going to take many, many years. Before that, a family office that's small and agile probably will move quite a significant amount of their wealth into some kind of crypto. And so HNWI, high net worth individual, sort of the abbreviation of that. And the same goes for China. So China has traditionally had a lot of miners, so they own a lot of Bitcoin. But sort of the second movers are really these wealthy entrepreneurs that come from tech background or come from, could be as simple as traditional coal mining, for example, or management of companies, etc. And so those are now the ones that are driving a lot of the price and the price action of crypto. And so currently, if you look at all the high net worth wealth in the world, you have around $60 trillion. Just to give you an idea, if you take all the sovereign wealth funds in the world, you have about $15 trillion. So you take Singapore, Chinese Sovereign Wealth Fund, etc. So all these individuals in the world, and so high net worth individuals normally is categorized as people that have $1 million liquid to invest. You have 60 trillion. And so how do we move part of this money, or all of it at some point, into crypto, into a digital type of token? And so, by the way, when I talk about crypto, I don't just mean Bitcoin and Ethereum. I mean any type of token, which could also be security tokens. So security tokens are tokens that, does anyone know what a security token is? So a security token would be a token that tokenizes a piece of real estate, piece of land, venture capital fund, private, any traditional investment, you can technically wrap into a token. Or asset-backed tokens, like gold, several type of commodities. So that's what we do. Bancoris, we're called. That's our Western name. In China, we're called as MiCai. We are a company that's 4.5 years old. We are the largest provider of wealth management software in China for private banks and family offices. We have over 200,000 family offices whose money that's handled by our software. So our software does the analysis, we do risk management, we focus a lot in the middle and the back office. So the data we have is quite interesting. We know how they're invested, we know what they like, we know what assets are interesting, what assets are not, and the behavior of a typical Chinese or Asian family office, for that matter, is quite different from the rest of the world. So that's what we've been doing, and we've been using blockchain for about 2.5 years to store a lot of the KYC data on the chain. So as an audit trail for KYC, for onboarding, asset reporting, etc. So that's our team, sorry. That's our team. We have about 45 people. It's just our Beijing office. I myself was at Morgan Stanley in Hong Kong. My co-founder, Eagle, he was for almost 10 years at Standard Chartered. So Standard Chartered is a very big bank. Is number 3 currently in China, so he built it out for about 10 years. And then before he was at Credities. So Credities, they invented peer-to-peer lending in China. So about 12 years ago, and now they're the second largest wealth management firm for high net worth. And he was the acting head of wealth management. Professor Gerd Bergh, he was the CIO of Betterment. So Betterment you might have heard of. It's an app. It's the first private robo-advisor. And it's still the biggest, as far as I know, in the United States. Ouyang Hui, he used to be the head of big data and quant at UBS for Asia. And then we have Steven, who also works with Trust Token, who is a Berkeley PhD. And then we're invested in by the president of NEM. So NEM, the ticker is XEM, ZEM. They're around, I think now the 8th or 9th largest currency in the world. Chris Van Auken used to run Morgan Stanley, the private bank. So he's the head of that. And then Charles Edouard Bouet, he's the chairman and CEO of Ronald Berger. So Ronald Berger is the largest consulting firm in Europe and the 4th biggest one in the world, besides McKinsey, Boston Consulting Group, etc. And then we have several more people from Google, etc. Roger Kirby is quite an interesting guy. Back in 2008, when the crisis happened, he represented the Moody's shareholders to sue Moody's against the bad ratings they gave to a lot of sovereign debt, etc. And then he also was the head of litigation for the class action lawsuit against Citibank. So Citibank had to pay over $580 million for basically bad investment recommendations during the mortgage crisis. So he was on the other side. So he's responsible for one of the biggest lawsuits ever done for investor fraud, investor litigation. So what are today's challenges for high net worth individuals? Well, believe it or not, biggest challenge for them often is that they can't get access to it. When I say can't get access to it is not, yeah, they can go on Coinbase, et cetera, put in a few dollars. But when high net worth individuals invest, they often do it with quite a lot of money. And not every exchange takes it at the right price. There are not that many dark pools yet. And also a very, very big problem that they face is the custody problem. So they're very unfamiliar with cold wallets, hot wallets, et cetera. So actually, custody is one of the biggest problems you see for the mass adoption. For retail, it's not really a problem. You have a Trezor, you have a nano ledger, et cetera. You put it on your cold wallet, or some people on a hot wallet or on an exchange even. But for high net worth individuals, it's actually quite a problem. They prefer to go with a bank or a third-party custodian that takes responsibility. Now there are hardly any big institutions that they are familiar with doing that. A second problem is it's a very costly high touch process often to make sure. And then what I'm talking about is most investors, they invest with a trust. It's very difficult with a trust to open an account with an exchange. It's very high touch. Not a lot of exchanges want to touch it. Also taxation-wise, especially if you're a Chinese passport holder investing in an overseas exchange, it's often quite tricky. The third thing is inconsistent reporting standards. This has a lot to do for the security token assets, actually. So especially crypto funds, people don't really understand what's the underlying, how to report it. And this is in general a problem of the entire high net worth individual industry, right? Many funds calculate return in a very different way than another fund would do, or there's risk-weighted return, there's average time, there's time-weighted return, et cetera. So it's very, very messy for high net worth individuals. Another problem is the data breach risks, and also whenever it comes in the news, it's always this exchange got hacked or this wallet got hacked, and so a lot of high net worth individuals are often really, really worried about it. And then last but not least, compliance. So many high net worth individuals, they work with compliant vehicles. They're very, very worried at some point they'll get a letter from the taxman or from any kind of compliance bureau telling them that they're not compliant with certain things. And so that's a very big issue. We have developed 3 modules that are tailored towards high net worth individuals, primarily in Asia, to access crypto. So both Bitcoin, Ethereum, but also other type of crypto assets like security tokens, asset tokens, etc. The biggest one is what we call B-Market, Bancors Market. It is a marketplace that is fully compliant, where people can buy, family offices with whatever entity they want to, can buy different tokens. So we work with Pantera, we work with several other funds that they can list their token or their fund onto the platform. We're in talks with several others. And the difference between, by the way, a security token marketplace and an exchange is the amount of compliance. Every investor has to be accredited depending on a jurisdiction, have to abide by the laws of the underlying token that they buy. I'll go a little bit deeper into that later. B-Loan is a lending type of facility. So family office's wealth, if you break down their wealth and you look at the different assets, actually most of the assets are what you call illiquid. What it means is that it's just very difficult to sell when something happens. A lot of it is in land. Real estate is still, like Chinese investors, 50% of the net worth is real estate or tied to real estate. A little bit of venture capital. Venture capital, as you know, often has a lock-in of 5 years, 7 years, 10 years, etc. What blockchain, the really great thing about blockchain for high net worth individuals is it can unleash a lot of that liquidity. And that actually increases a lot of value. In economics, you have some term called the liquidity premium. Is someone familiar with that? Do you know how much it is?
Well, liquidity premium depends on the asset, right?
Correct.
Yeah, so it depends on how. Well, it depends on different factors. Number one is there an agreement in the market about how much this thing is worth?
Yeah.
You may have to take an average across different markets.
Correct.
So depending on how easy that process is and how easy it is to convert to cash,
Yeah.
and that determines the level of premium over like a risk-free asset.
Exactly. So there's a premium that people would pay for an asset that's liquid versus an illiquid asset. In general, depending like gentleman said, is between 20 to 30% of the underlying value. That's more or less. Is that a right figure? Yeah, it's more or less between 20 and 30%, depending on the asset. So what it means is that if I have a liquid asset, a huge block of apartments, farmland, piece of art, piece of very old wine, and all of a sudden I can make it liquid. I can sell a part of it or I can borrow against it. The value of the total, of the whole building, of the piece of art, goes up by 20 to 30% because I just made it liquid. And that's really the key value that blockchain gives, specifically from the eye of high net worth individuals. And that's huge, right? The real estate market, it's like, $250 trillion, right? Add 20% to that. It's like $50 trillion, right? So it is a huge benefit for high net worth individuals. Now, high net worth individuals are only starting to look at it, to be honest, since the end of last year, right? We did some survey and, just anecdotally, we asked people from family offices at these, sit-down conferences like this, like do you own some crypto? Yeah, probably between 5 and 10% of the people have some crypto. But then when you ask how many people of their total portfolio have 1% or more in crypto, it's like one person raising their hand. It's a really small amount. That will change over time, and that will change, we believe, this year. Be tokenized, it's a module for tokenizing assets. Tokenizing assets is more of a legal effort, but there's several other firms that do that. For gold, for example, there's DGX, there's Anthem Gold. For other assets, there's like Trust Token, like I mentioned before. In the United States, the way tokenization works is normally via a trust structure. So you're familiar with what a trust is? So a trust is a legal construct in which you can wrap any type of asset: art, real estate, venture capital fund, hedge fund. And then you can appoint, or the sort of trust administrator can appoint any type of beneficiary to the trust. And any amount. Could be 1, could be 10, could be 100, could be 1,000, could be 1,000,000. And so what trusts, what a lot of trusts are doing these days in tokenizing assets is they say, look, the owner, the beneficiary of the trust are the token holders. And so within the token, within the smart contract, you can actually say, look, this is part of a ownership of a trust, and it's regulated by this particular trust administrator who is an operating firm, and it's all fully legal and all fully compliant. So that's normally how it works in the United States. In other jurisdictions, often very different, right? You buy a share of a company, and the company owns the underlying, et cetera, but that is something that happens. Great. Now, there are a few things that I mentioned before about compliance. What do we do and how we're different from, let's say, an exchange like Huobi, who we know very well, or Binance, is the following. So we create digital IDs, digital identities for the high net worth individual investor. So whether it's their actual trust company they invest with, their investment vehicle, or whether it is their personal identity, we know that they're accredited investors. We have a copy of their passport. We have a copy of all the documentation that's needed, and that's put on a chain. So whenever they buy a token for which a certain documentation is needed, for example, you need to have your tax receipts, you need to have You need to be whitelisted by a third party, that you're not on any terrorist watch list or something like that. That documentation is there. And automatically, with the private and the public key, the actual ID was given to the security token, so that the address that the investor has is whitelisted to buy this type of particular security token. B-Report is a standard that we've been promoting in China for a while now, for really transparent reporting, specifically on measures like return and also risk. So we have a separate one for risk. So as you know, in the United States, you have Moody's, you have Fitch, you have Standard & Poor's that rank different funds and that look at different risk measurements. But there's no real clarification, or there's no real standard on how risk versus return is calculated. We've always been, in a decentralized way, pushing for a certain standard of how funds should calculate that. So that is another part of the protocol that we have. And then we've been working in AI for quite a long time. We actually originally started as an AI company, but then found out that our AI engines have a data problem, and blockchain solves that. So we currently have 3 AI engines in operation. There's a risk engine that calculates different risks. So we can calculate what if, let's say, oil will go up by 2%? What is the effect on your net portfolio? What if Bitcoin drops by 5%? What will happen to your net worth? But also stress testing and scenario analysis. So for example, what if, let's say, the Fed raises interest rates by 1%? How will it affect the actual borrowing rate across your whole portfolio? How does it affect your leverage ratio, et cetera? Financial planning engines. So currently, our engines are used by 3,000 relationship managers. So each relationship manager has about 50 to 60 clients. This is basically a tool where financial planners talk to the client and then type in certain data and come up with portfolios. And these portfolios are then managed continuously and tracked continuously by us. And then there's a portfolio engine that does all the above. So we've been in business for almost 4 years. We were part of Microsoft Accelerator. We opened a London office last year, and for us, really the big part is to go fully international, because before we only had clients in China. I'm not sure if you're familiar with some of our clients, but NOAA. So NOAA is kind of like the largest private wealth management firm it's like the UBS in many ways of China. It's a listed company on New York Stock Exchange. They have about 150,000 family offices as a client. They have 56 offices all in China. They have now one in Vancouver since last year, one in San Francisco, one in Hong Kong, and they're opening one up in Europe. There's Quark, and then there's several other ones. The big vision that we have is that within this and 10 years' time, you'll be able to own all your wealth in tokens. What I'm not saying is put all your wealth in Bitcoin. What I'm saying is that the way that currently you're investing, you buy a stock, you buy a fund, you buy a title deed when you buy a house, you'll be able to own that in tokens. And that has a lot of benefit, especially for those high net worth individuals whose wealth primarily is in illiquid assets. Because the liquidity premium is 20 to 30% of an asset. So people can become 20 to 30% wealthier. And this is not just good for high net worth individuals, but this is also very good for everybody. Because imagine, so a big problem that I see everywhere when I travel, I'm originally from Belgium, so when I look at Europe, a very big problem in Europe is people getting on a property ladder. Same thing in China. And so if I look at my parents' generation, what they had is, they easily, once they got out of university, can quickly get a down payment and get on the property ladder. These days, for our generation, it's very complicated because wages have grown much faster. House prices have gone much faster than wages. And so it's quite difficult. And these days as well, banks ask more down payment than before. Before in Europe, it was less than 10%. Now it's 20% or more. Imagine you can tokenize houses and you can buy 1% of a house with an option to buy the other 99% of the tokens of the house as you go along, as you start working. So right out of college, you can actually start getting onto the property ladder. This is a very, very big benefit. So it's not just for high-net-worth individuals. I think this is a huge benefit. I mean, this is blockchain providing a lot of benefits for everybody, specifically from that liquidity point of view. So the big vision we have is all your wealth, health, and tokens, or a one-stop shop for any type of token, specifically security tokens. For those interested, we have a token sale as well, starting soon. Bankores.com is our web address, and our Telegram group chat is over there. You can just scan the QR code. I believe there are probably quite a lot of questions about China and sort of what's going on. There are a lot of myths about what's going on regulatory-wise. I see almost every ICO that I meet these days, they block Chinese people from investing. There are a lot of myths about that. So I will open it up for questions right now. Thank you very much. It's a pleasure being here. Yes, sir. Very good question. So let me just repeat the question for those in the back. So the question was, liquidity is a very good thing, making illiquid assets liquid. But there's a difference between fungible assets and non-fungible assets. So fungible assets like gold or copper or precious metals are the same everywhere in the world. And so therefore, it's quite easy to get liquidity because a pound of gold in China and a pound of gold in America is the same type of material. So it's really easy to get a market there. Whereas real estate is not, because or art, et cetera, because there are a lot of different aspects to some non-fungible liquid assets. It's a really good question. And you're right? Fungible assets are much easier to make a liquid market of. However, for illiquid assets, I mean, you have already in real estate. Are you familiar with REITs? So real estate investment trusts already showed it's possible to create a little bit more liquidity than just the real estate guide to buy a house, with. Let me look at it from the investor point of view. So in China, there are a lot of people that, let's say, have liquid equivalent of $1 million. Currently, what they can access of the market often is they can buy one thing. And where do they buy it? Vancouver, San Francisco, New York perhaps, Australia, and that's about it. And they mostly buy just one property. And you're absolutely right. From an investor point of view, they're stuck. If tomorrow, Seattle market crashes, a lot of people are gonna lose a lot of money. They buy it for investment, by the way. They don't buy it to live there. If you can buy tokenized real estate, with that $1 million, you can buy 5% in Vancouver, 5% in Seattle, 5%, and you can buy also other assets that normally you cannot buy, because with $1 million, let's say in New York, you cannot buy Fifth Avenue. You gotta buy closer to, closer to the north, closer to, other places. Brooklyn, yeah, used to be able to buy in Brooklyn for that. Yeah, I wish. So, if you tokenize assets, there's also a different class of investors that all of a sudden can pile into your asset, and so you create much more liquidity. Now, the second part of his question was about the transparency of pricing, right? Because in public markets, companies, they have quarterly reporting where you can see, what their P&L is, what their revenue is, etc. How about real estate? Real estate is a little bit more tricky, you're right. And I think this will unleash quite a bigger industry. And I think blockchain can help, and especially blockchain plus the Internet of Things can help a lot with that. And sort of trying to price what is the real value of this piece of apartment. Yeah, you can say a similar apartment in the same street in a similar building was sold last week for this amount, so therefore, this particular building should be, or this particular token of this particular apartment should be worth this much. Because in tokenizing real estate, by the way, it's not like, there's like the New York real estate token and there's no, it's most of the case, there's a Fifth Avenue, on 32nd Street, 5th floor, apartment number 4 token, right? That's normally how it works. You have REITs as well that can become tokens, like one building, you have own ownership. But I think there will be much more transparency in pricing for real estate or art, etc. Plus, the market is very public because you have more participants. What blockchain does, it allows you to do, as all of you know, is a more trusted way of doing transactions. And there could be a lot of data, etc. Yes? Oh, very good question. So the question is, for those in the back, the question of the gentleman is, what percentage of the property you have to own or tokenize if you're the seller, basically live in the properties? That's the question, right? Yeah, that's a very good question. It really depends on what the smart contract says. So some smart contracts would just be about the economic benefits. So there are many people that have an apartment, they own it 100%, but they sell off, let's say, 90%, they keep the remaining 10%, but then it allows them the privilege of living in the apartment. And then what they do is they give the rent that they should be paying if they were not living in there, but 90% of the rent, and they give that to the token holders. So that's one way. Other people, they only tokenize 10% of their house, or 20% or whatever. So there's a variety of possibilities. What's also quite attractive, especially in China, because there is or in certain countries where there's a problem with the capital accounts or convertibility of money, is that they just buy 100% of the tokens and actually buy the property. That's a possibility as well. So I hope that answers your question. Okay, thank you. Yes, sir. Yeah, good question. So I'm a big believer in derivatives upon tokens. So having the option to buy back the 10% at a certain amount or at a later point in time, or be the first buyer whenever they want to make a transaction, that can be an option as well. But that, of course, will affect the price. So if I can only buy a token and can hold it for a certain amount of years, or I can buy a token and I know for sure that if I acquire 100% of all the tokens, I technically can never live in the house. Of course, these tokens will have a different price than tokens where if I buy 100% of the tokens, I own the actual underlying property and can live in it. Yeah, absolutely correct.
Okay, I have a comment about your initial statement about why people in China that need high net worth individuals, why they have 1% in cryptocurrency. I think it's because as a financial advisor, you would advise the individual what their risk tolerance is, right? Just generally, that's the question.
Yeah.
So let's say I have a risk tolerance of, let's say, a certain percent volatility. So across the entire portfolio of the volatility, they have to say, okay, everything that I invested has to be in this total volatility level. With the cryptocurrencies being so volatile, it's by necessity that it has to be a very small amount of the investment. So I think my point is, as the prices of cryptocurrency stabilize, as it kind of more price gets discovery, that percentage will go up more in the future just by necessity.
Yeah, just to repeat the anecdote. So the case was, it was asked how many people own, a Bitcoin or a cryptocurrency, and a few people do. And then when you ask who has 1% or more of their total net worth in crypto, like one person of the entire room had that. So yeah, there was a question at the back somewhere. Yeah, sir.
Back to China.
Yeah.
And Asia at large. There's
Yeah.
South Korea is going to ban crypto and the market tanks. There's so many conflicting stories coming out about Asia at large. Is there one place that we can look for true, honest information?
Yeah, very good question. The amount of rumors that I've heard about China at this conference that I didn't even know about is huge. You know, as soon as China banned ICOs, a lot of the bits, so I've been owning crypto since 2012 in China. After they banned ICOs, a lot of the talking went underground in WeChat groups and some groups, and there's not really a media outlet that specializes in it. I think if you know someone on the ground, talk to them. The exchanges normally, the Chinese exchange like Binance, Huobi, whatever they publish normally is accurate. But other than that, I think probably most of what you hear is just not true. Or like a rumor that someone enticed, oh, it's China, you know, China this, China that. But I mean, in general, my view is, you know, look a little bit like the internet, right? And this, yeah, since they're recording, there's not that much I can talk about it. But in general, Chinese politician regulators, they're engineers by training, unlike most other governments. They understand pretty well blockchain. They understand that there is a huge benefit in blockchain. Now, it's a little bit like the internet. Does China hate the internet? No. There's Alibaba, there's Tencent, there's Baidu, and they're supported, you know, national champions. When Xi Jinping travels to United States, he brings Jack Ma with him, and you know, all those people. But is internet open in China? No. There's a great firewall. So China wants to, you know, China doesn't like often an open internet, but loves a kind of semi-controlled internet and does an often better job at it than anywhere else, right? I can go to China, never use a wallet, to pay everything online with my phone. It's great. So let's put that analogy further to the blockchain, right? Does China hate blockchain? No, absolutely not. I mean, we are part of like a kind of a research group that's government sponsored on blockchain together with Huobi and several other, you know, key players. Do they like a very open, super transparent blockchain where, you know, a lot of problems can happen? No. But do they like blockchain as a concept? Yeah, absolutely. The reason why they banned ICOs is the same reason why they banned IPOs for many, many years. Speculation, people losing a lot of money to scams, complaining, you know. So I think in the light of that, you sort of have to see China. I think from a corporate side, people are late to the game, right? Like Alibaba, Baidu, Tencent, J.com. I mean, I was in Davos about 3 weeks ago and, you know, talked with several key people at JD, et cetera. They weren't doing blockchain or hardly any blockchain. Now after Davos, because everybody else is doing blockchain, all of a sudden they put it at #1 corporate strategy. And when they put something at #1, they put, you know, teams of hundreds of people behind it. So you'll see this year a huge catch up in any type of you know, vertical. Yeah. What? Sorry, someone in the back there. Sorry, I have difficulty. Let me just give you the mic.
Just help me understand. I think I understand now that I can buy part of a piece of art, part of a house in China, whatever. Well, how, you know, when I go to the stock exchange, they're all listed. I can decide which ones I want. Who's going to manage the selling of them? Where would one go to see what's available? That's question number one. And question number two is, one reason it's easy to use the exchanges is because there's high volume. But this house over here is owned by 10 people, not 2,000. So it's sort of two questions. Will your company manage these exchanges so I can look at the list of things that are available? Oh, anyway, you get that, yeah.
Very good question, and the short answer is yes. The goal of our company is to curate that particular experience. Now, it will not be like an exchange where there's an actual market maker. Most exchanges, I think Binance now is about 300 coins. Huobi is about 500, same as OKX. For a company like ours, we always have more products, right? UBS carries like 5,000 different products, etc. So yeah, it will be less liquid, but it will be more liquid than before. Yeah, I think my time is up. Perhaps one small question. Yeah, sorry. Your last question. Very good question. Very good question. So there are 3 crypto economic use cases of our token. The first one is if you own the token, then of all the fees on the platform every quarter, and you've made 3 transactions per quarter, 20% of the fees will go to you as a token holder. So we'll go on an exchange every quarter, we'll buy our token back, and then for the people within the ecosystem that have made 3 transactions, they'll get part of 20% of the quarterly fees. So that's one way. Second way is the main utility currency, which means so we need a lot of third-party vendors that do KYC, AML, etc. We pay them in the token, as well as the token is used for voting on the different protocols that I mentioned, Port, etc., by the token holders. So that's the second way. And then thirdly, similar to a private bank, there are actually different tiers we have. So we have normal users, we have silver users, gold users, and then platinum users. And depending on how many tokens they hold and keep on holding, they get access to different tiers on the platform and different products. Because some assets, like a penthouse in New York, for example, is very scarce. This primarily will be given access first to platinum members that have more money to play with, etc. So similar to a private bank, we have these different tiers, and it depends on your ownership of the token. I hope that answers your question. Cool, I think my time is up. But thank you so much, everybody. It's really great to be here in Dallas. It's my first time here. But if you have more questions, yeah, you can come by. Thank you.
Thanks again, Greg. We're going to take a break, and we'll have our next speaker shortly. Just want to remind everybody about the early bird special for the next super conference here in Dallas. It'll be at the Convention Center in September. So bitcoinsuperconference.com/early. Go check it out.